Good afternoon, welcome to this week's wrap. Thanks Bill for coming.
Thank you.
So today is Thursday. Last night we had FOMC.
Yes.
I mean, we're all expecting it to be fairly boring. It didn't turn out to be that way, but why was it?
Well, now, I guess the question is, why do you say it wasn't boring? I mean,
Well,
what did you think we got? Say the
Well, that's what I was going to ask you. As far as from my less informed take than yours, we didn't learn anything else. It's as if you had to hear it from the horse's mouth. You had to hear it said. But did we learn anything?
No, not at all. I said, I guess the only thing is, I got an email like mid-morning yesterday. The rumor around was Brainerd, who was the new governor, didn't get his economic statistics in on time. And it was called the dot plot. And I guess my question is, if he hadn't got his economic, the only thing we could have had yesterday was, the CPI number and the housing number, they sort of balance each other out. So to me, that basically said that if they weren't really concerned about that and they were wait for the governor sort of at the midnight hour, I didn't learn anything, in reference to tapering, in reference to steady as she goes, lower for longer, etc., etc.
Anything to do with rates? That's the same old story, isn't it?
Yeah, I mean, basically, if you look at Ionia rates and even Eurodollar rates, we're only talking about maybe the difference last night versus the March meeting, 8, 9, 10 basis points maybe. And one of the things that you saw was, we may have talked about this last week. I mean, the simple fact is, at one point, you had the Treasury 10-year like 12 to 15 basis points higher than Spain, Portugal, Italy. I mean, this doesn't make any sense, So people were selling treasuries to buy Spain, Portugal, sort of like, I've got a couple of return tickets on the Titanic, would you like them?
So anyway, I found that all, at least we had a bit of volatility.
Yes.
And markets did jump down and jump back up, and it was at least exciting, which is more than we're used to.
Right.
IPOs at the moment, there's a lot of them going around.
Yes.
We've got a few grey markets in things like Zoopla, which has just obviously gone probably public. What do you think of TSB?
Well, I think let's back up. I know it just shot out of the gate like a rocket. Was Royal Mail possibly a notification of maybe we've gone too far, too fast, etc., because that went right to the moon. And then you had like Pets at Home and Boohoo.com and Saga and stuff like that sort of all came with, quote, the low end of the market. And you've got 4 or 5, and the names come so quickly now, like Fat Face or companies like that. And I think what we have to look at is the IP market here in the UK is still very strong, very vibrant, very professional. But the investors are saying, wait a minute, I'm looking at value for money, maybe the end of the last pence. And so I think what we're going to see right now, whether we want to blame it on the World Cup, whatever we want to blame it on, I would see more and more companies deciding maybe to come a little bit later rather than sooner. And I think I would probably say that maybe 3/4 of the companies, again, these are companies I've never heard of, have either decided not to come with the IPO or postpone it until, quote, a later date. But I don't want to confuse. This is a very strong market. The professionalism in the IPO market here in London probably is as good as anywhere in the world, maybe excluding New York. So I don't want to think that there's any problem with the market. I just think that pricing has been something.
Okay, so that taken into account, TSB is supposedly going to have a market cap at 0.7 of its book value or its assets. That's not a particularly good sign, or is it just that company?
I think it's that company, and maybe it still has the stigma of RBS, Lloyd's, the co-op bank.
Just a bit of
caution. And I think maybe that's what it is. It's just a situation where, in the housing market, is it cooling? Have the banks not made any money on the investment side of this, that, and the other? Maybe the only money they've been making has been mortgage lending of this, that, and the other. And what's going to happen? I guess you're seeing a lot of people getting ready with the change in the ISIS. What is that, 1st of July? Is that when that comes into effect? So you are seeing, the simple fact is probably retail participation, and I'm talking about individuals like you and myself, owning stocks and shares are probably as good as they were, well before just crashed.
But surely income from mortgages is only going to go up as rates go up. But anyway, that's not how...
Well, the question is, who do you believe, Vince Cable or Mark Carney? And I think we've talked about this before. I think one of the things is you got, depending on who you talk to, about 8.4 to 11 million people in this country that have mortgages, okay? I know we have probably a larger percentage of fixed rate mortgages, okay? Well, but that still means that, you know, if wages are only going up 0.7%, yes, and I know inflation now is only 1.5, you know, your heating bill, your light bill, your petrol price, okay? That's all going to be the same, even if you're only paying 50, 60, 100, whatever, more per month for your mortgage. Therefore, will we have less consumer spending? And I know this is no indication, but I mean, we saw the UK retail sales, okay? Now, we're blaming that on late Easter versus early Easter, or school holidays, or, you know, full moon, you know, tomorrow night, because it's the last day of spring or some kind of nonsense.
Yeah. Okay. So some more issues have flared up in the Middle East, in Iraq. That hasn't really affected stock markets. Obviously, oil's gone through the roof. Is that the right effect on the market?
Well, I think it's been quite interesting because, you know, we had this panic 6 months ago, I guess probably the end of last year, Ukraine. Well, that came and sort of went. But I think, in answer to your question, okay, I know we've been following what's been happening with the Fed, what's been happening with the Bank of England. I'm more interested in what happened with the Norwegian Central Bank today. I mean, I don't know whether you saw that or not, but they came out with a statement, because they only meet, I think, quarterly. And the statement today was, March was fairly hawkish. Today's was fairly dovish. And all of a sudden, within the space of about 10 minutes, you saw the Norwegian krona fall 1.5% against the euro. And the simple fact is, the statement was, well, we are slightly concerned about the situation in Iraq, disruption of oil and this, that, and the other. And Norway should know they should know a lot about the oil, okay? And I mean, you already saw their Norwegian, I don't know what you call them, but the Norwegian interest rate futures have now said, instead of a rate hike in mid-2015, we're talking mid-2016. So therefore, here is a country that says, you know, I don't care what your investors say, hopefully we're wrong, and Brent crude isn't going to 120 bucks a barrel.
So the point is that the oil market actually affects everything.
Yes.
It affects, you know, equities, you know, consumer spending.
Well, as I just mentioned, you know, if you're looking, or let's just say that this does get worse. Brent crude goes to 112, or it's already above that, 115, 120. Well, if you're only getting 0.7% pay rises here, as I just mentioned, you got your fixed costs. Well, all of a sudden, one of your fixed costs is now going to be an increase in petrol. Now, an increase in petrol, what is that going to do to food prices, okay? You know, I know that Aldi and Lidl and everything can keep dropping the rates down, but it still has to be delivered, okay? You know, the HGV still has to go from A to B to C to D, and, you know, we have lovely weather here, but how about if we do have an early winter and heating price? So, I mean, I'm not trying to be a doom and gloomer, but
it's more important than people are making it out to be. Is that what you're...
Yeah.
More effects on everything.
Yeah.
What have we got to look forward to? I mean, the FOMC last night was the excitement we've been waiting for, and it didn't disappoint particularly. What are we looking forward to now? Which sort of central banks are going to be telling us things?
I'm not going to tell you what report I got yesterday before the FOMC meeting, but it was listed as the FOMC meeting yesterday meeting tonight could be the, quote, highlight of the summer. Yeah. You know, and, you know, what are we looking at, okay? We got the World Cup now for 3 more weeks. We got Wimbledon starting, okay? If we start having some nice weather, people are going to say, well, you know, watch the World Cup, maybe not the Spanish, but, you know. And hopefully after tonight, we'll still be watching it. Yeah. But you see, is there, I mean, they've already told us, we know what they're talking about. Modest growth. No inflation here, no inflation in the States. You know, we're now seeing what the Treasury 10-year 255 or something. But it's going to be quite interesting, and I think we've talked about this before. The reflection of the euro. Okay, now the euro is up today against the dollar, not because of anything against the dollar, but because of the Norwegian krona situation. Okay, now we saw that a year ago against the Turkish lira, against Bratislava, whatever it is, and the Hungarian forint and the Polish. So we're starting to see, again, people looking at the micro movement movements in certain currencies. Now, if you're looking at the euro 136.65, a major number. I mean, this is a 200-day moving average. So what we're starting to see, and I know this doesn't help when we talk about volatility, okay? I mean, everybody is looking at the 50, the 100, the 200-day moving average. So, you've got the algorithm trades and this, that, and the other are really down to a very fine print. The key thing, I'm very bullish and have been now for a long time, sterling. I think a better trade is euro sterling rather than euro dollar. And we're well above 170, 171, 172. And it's going to be quite interesting to see, with Vince Cable.
So you think we could go higher in cable?
Yeah, I think we could. I mean, if we start, I don't think Governor Carney is really not looking at the housing market. I think that the bankers are looking at, quote, the slack. And that's the key, is how do you determine what the slack in the economy is? Do you look at it differently in Runcorn or Cornwall versus London or someplace like that? And I think that's even exactly what the U.S. market is looking at. Because in reality, the employment picture in the States is very strong, okay? But according to the statistics, it's not very strong. And then, of course, you also have the shifting of people. And we've talked about this, these pop-up businesses. Who, I used to work for, Y, and everybody else worked for Z, and we've all been laid off or we retired or whatever. So we also have more kitchen industries. Now, you still have well over 1 million people in this country. What are they, fixed contracts or something, where you're contracted to X company, but you only get paid if you work, okay? And I mean, another silly thing here, and again, if you're not in London, you probably know much about this, but we had a taxi cab strike last week. Well, everybody said, well, who cares? And, I had an Addison Lee driver a couple of weeks ago, right? Just bitching and moaning, complaining. Well, he's off to Uber, okay? Now, so you're seeing sort of a shift, and I mean, anybody who's been in the City of London for the last 20 years, I mean, Addison Lee has always been the premier company. So, you're starting to see shift. Why? It's the company, it's the money, et cetera, et cetera. And I don't even know why I brought that up, but I mean, it's a point that people are really looking at their take-home pay, their goals and objectives. And I mean, we can look at our own industry. I mean, everything that we're trading now is at a 7-year low. I mean, I'm talking to people, whether it be here, whether it be Tokyo, whether it be New York, and everybody said, just give us some volatility, okay? And I mean, I was doing a seminar over the weekend, and I was being interviewed over the Spanish days, and it wasn't lost in translation. And you sort of said, can you tell me about volatility? I said, huh? What? You said what? like, where is it? And I mean, until we see that, and to go back to your original question, I'm afraid maybe last night's FOMC decision could be the highlight of the summer, unless we get a massive, hopefully we don't get, a situation now in Iraq. Oil goes 115, 120, 125, and then gold goes to, I'm not so much concerned about gold, because that's not going to have much of an effect, but petrol prices will have both a direct and indirect impact on the consumer. This is what Vince Cable was talking about last night in reference to his comments, that don't raise rates. We have to have a consumer-led recovery for it to be a solid recovery.
Perfect. Wise words, Bill. Thank you. Thank you very much.